I very much want to thank Senator Dodd for coming this evening. He has missed a vote or not? You missed a vote to come, or?
I missed a vote.
Missed a vote, okay. Well, this will be something we're very upset about, and I appreciate your doing it. I know that the missing a vote is a big deal, but you're not up for re-election this time.
Well, we hope not.
Okay.
Yes.
So what we're going to do is I'm going to introduce Senator Dodd. He's going to make some remarks, and then I will have a chance to question him, and then you'll have some chance to do so as well. So Senator Dodd was born in Connecticut, but raised partly in Washington, D.C. He went to Georgetown Prep in this area. He then went to college at Providence College. From Providence College, he joined the Peace Corps and served in the Dominican Republic, where he learned Spanish and learned to speak it fluently. When he finished his 2-year tour of duty in the Peace Corps, he went to law school at the University of Louisville, also joined the Army Reserves. And then when he finished law school, he went back to Connecticut and was elected in the so-called Watergate class in 1974 to the Congress, re-elected in 76, re-elected in 1978. In 1980, he was elected to the Senate, succeeding Abe Ribicoff, and has now served 5 terms as a senator, is a senior senator from Connecticut. And among the other things he's done in his 30 years is chair a number of important committees and sponsor a number of important pieces of legislation. And most importantly, perhaps, and people know this, and it's one of the reasons I think so many people are interested in hearing from you, Senator Dodd. Senator Dodd is the chairman of the Banking Committee, and the Banking Committee has recently developed with the House Banking Committee the legislation now known as the Dodd-Frank legislation, and that legislation was something we're going to talk about tonight. That legislation will dramatically change and affect the way the financial service world is regulated, among other things. Senator Dodd's also been very actively involved in health care, and when Senator Kennedy was ill, Senator Dodd took over the Health Committee and basically did the function of Senator Kennedy in trying to get the health care bill through that committee and ultimately through the Senate and the Congress, and so he was serving double duty at that time. Senator Dodd has chosen not to run for re-election. He has decided to do some other things we'll talk about, and he's married, has 2 young daughters, and I got a feeling that those 2 young daughters will keep him very, very young for quite some time. So without any further ado, my pleasure to introduce the chairman of the Senate Banking Committee and the 8th ranking member of seniority in the United States Senate, Senator Dodd.
Thank you very, very much.
Thank you. Thank you.
Well, thank you very, very much. And thank you, David, for that very generous introduction. The vote that I missed was to nationalize private equity companies. I hope that... I don't know how it's going up there, but
well, which way
probably just a 1-vote margin will decide the outcome of that.
Well, which way were you going to vote?
Let's see how I'm treated here, David. Which question, I love David's introduction. Thank you, David. Sometimes the introductions go longer than your remarks. Maybe the case this evening. I'll try and keep this brief. You've been very patient. And actually, the only vote I'm missing, and I hope this does carry, is the vote to adjourn, which would be nice. And I know a lot of people across the country would hope that would occur this evening, so we'll be out of business as of this evening. But let me get a little news for you, because one of the things we're going to do this evening, and I'm very appreciative of Harry Reid and Mitch McConnell, is we're going to vote tonight to confirm the 2 members of the Federal Reserve Board. So we'll get both Janet Yellen and Sarah Bloom Raskin on the Federal Reserve Board this evening. And as Ben Bernanke said, I need them. I don't even have enough people to have a bridge game at the Federal Reserve. So he's going to have a complement to deal with potential 13.3 problems that those of you who follow those issues will be able to deal with. I love introductions. I wasn't sure how long David was going to go in that gracious introduction, but I sort of collected introductions of political figures over the years, and my favorite introduction ever given of anybody in public life. Years ago, William Howard Taft had retired from public life and was given a rather sumptuous dinner, elaborate dinner at the Waldorf Astoria in New York. And Taft, as of course I recall, was not only the only individual in our country who had ever served as both Chief Justice of the United States Supreme Court and President of the United States. He was also a towering figure physically. For those of you who've seen photographs, he was about 6'6", weighed some 350 pounds. The master of ceremonies, David, that evening was a colorful United States Senator from the state of New York, Chauncey Depew. And Chauncey thought of himself as a rather glib and clever fellow and went on at some length to introduce Taft. Give you an idea how things have changed. Chauncey was not only the senator from New York, he was simultaneously the president of the New York Central Railroad. No conflict there, I'm sure. That's how he did his business. Chauncey completes this introduction of Taft by saying, "It now gives me a great deal of pleasure to present to you a man who is both pregnant with integrity and pregnant with courage. Well, of course, the crowd roared its approval, gave Taft a standing ovation, waited for the noise to subside. Taft slowly made his way to the podium. The crowd was reseated, and Taft turned to the audience and he said, if it is a girl, I shall call her integrity. And if it is a boy, I shall call him courage. But if, as I suspect, it's nothing more than gas, I shall call it Chauncey Depew this evening. So when you hear these wonderful introductions, it's all right. Anyway, I'm delighted to be with you this evening, and I thank David very, very much for extending the invitation. The one thing he omitted from the CV was that, along with Roger Sant, we serve on the Board of Regents at the Smithsonian. I'm a congressional regent, and will be terminating my service in a few weeks. But I've enjoyed immensely my work on the Board of Regents that Roger chaired for so many years, and that David has joined us on. So in addition to the kind invitation to be with you this evening, I look forward to your questions and comments. And I'm going to keep these remarks very, very brief, because as I've been told, it's far more interesting, I think, the Q&A back and forth, which you may find more interesting, because I presume many of you followed all of this events over the last several years. And very briefly, just to give you a backdrop of sort of how I ended up in this. David's correct. I ended up sort of accidentally in all of this. There's not a meritocracy, as you know, in the Senate. You just have to outlive everybody else and survive them longer, and you can move up in the chain. And obviously the events with Paul Sarbanes retiring from public life. Joe Biden was either elevated or demoted, depending upon how you look at the vice presidency. And of course, tragically, my great pal and friend, one of the great human beings that I've ever known in my life, Ted Kennedy, gets ill and passes away. So I ended up, in effect, sort of acting as the acting chair of both the Foreign Relations Committee and the Labor and Pensions Committee, where the health bill came out of. And then, of course, the chair, beginning in January of 2007, of the Banking Committee with Paul Sarbanes' retirement. And of course, the events unfold in 2007. And despite the efforts, in fact, now ample evidence of the awareness that this, particularly the problem in the residential mortgage market, was beginning to really grow. In fact, a lot of people think that had we stepped in earlier in 2007, we might have at least put a tourniquet on the problem, and it might not have metastasized into as large a problem as it became. Events really unfold beginning in March of 2008. Now, I'm going to abbreviate all of this for you, but the Bear Stearns matter over the weekend of St. Patrick's Day weekend of 2008. The calls from Hank Paulson, Ben Bernanke, laying out the problems that associated. I left on Sunday night for Brussels to meet with the head of the central bank in Europe and didn't know the outcome of what would happen at Bear Stearns until I landed that morning in Brussels and discovered that, of course, there'd been the J.P. Morgan had stepped in, and, of course, the events over the coming days. Then it was 6 months later, almost to the day. You begin around September 15th to August to October 3rd. That 2 weeks was about as traumatic a 2-week period as I've ever spent in the 30 years in the Senate. The evening, I suppose, more than any other evening that will be etched and burned in my memory forever, was the evening that Hank Paulson and Ben Bernanke came up and asked the leadership of the House and the Senate, Republicans and Democrats, to meet in Nancy Pelosi's office. And to quote Ben Bernanke that evening, which I can now, in the midst of this discussion, he turned to the leadership in a very calm voice and said that unless you act within a matter of days, the entire financial system of this country and a good part of the world will melt down. And needless to say, the oxygen left the room entirely, with having the most important central banker in the world, not for speech purposes, but merely to let us know what he felt was the situation unless we moved. And obviously, those next 2 weeks were dramatic. We had the country reacting, and understandably so, with fury, over the notion that a $700 billion check would be written. And as Hank asked for it on 2 days after that meeting on September 18th, he asked that he be given the authority to do what he needed to do without any committee, any court intervening. Needless, the country reacted very negatively to something of that excessive. And so for the next 2 weeks, we tried to write some parameters around that legislation in order to get it through October 3rd by a vote of 75 to 24. The Senate voted to approve that the Emergency Economic Stabilization Bill. And on October 3rd, I think on October 1st or September 29th, October 3rd, the House voted and the President signed it law. I know it's been controversial. I happen to believe that had we not acted, and I'll go to my grave believing this, put aside all the things we might have done differently around it, but given the time constraints we were operating under, had we not acted, I do believe that we would have been in deep, deep trouble, in a very different situation, as bad as things still are for an awful lot of people in this country, had we not acted. And that evening, we were only about 30 days away from a national election. And there were members of the United States Senate that evening who voted from their seats, as I asked the leader to do so, given the import of that particular vote, who voted for that proposal, knowing full well it would cost him a seat in the Senate, and did so anyway. People like Gordon Smith of Oregon lost as a member of that body that evening because he decided that he had no other, he could not face himself, as he said to me later, having voted against it when he knew the import of it, even though his vote was not needed. So I happen to believe that we did the right thing. But obviously, just doing that was not going to be enough. And over the years, many people have argued for reform of the financial services architecture, the structure. And so we began the process of trying to put a comprehensive bill together. And needless to say, in the environment we're operating in, all of the, of course, the madness over the health care debate, in the middle trying to also navigate these waters of putting together a bill that would not prohibit all future crises, that's a ludicrous suggestion, but try to at least put us in a position so that we might respond in the future crisis with a lot more capability than obviously we did in this one. And so while people came to the office right and left and said, look, don't bother with me, I didn't cause the problem, it was never about being punitive or trying to somehow penalize those who may or may not have been responsible for the problems that we were faced, but rather to try and look at the architecture and structure so that, one, we could do two things. One is that we'd be able to be innovative and creative, a wealth creator, job creator, as we have been with the financial services system. And secondly, give people a sense of renewed confidence and optimism that this system can work and be fair. I've often, I think, told David this story, and maybe Roger, but I recall a manager of a sovereign wealth fund that came to see me one time. We talked, and I said, tell me why you park a lot of your resources in the United States. He said, for two reasons. He said, one, you Americans know how to make money. No one's better at it in the world than they are here. And secondly, he said, I've never lost a wink of sleep at night worrying about whether or not the system was unfair or would leave me at a disadvantage. I've lost money, I've made bad bets, but I've never lost a nickel because the system left me or collapsed in some way. And frankly, those two reputations have been severely damaged by the events in 07 and 08, and restoring that was critically important. I don't know if we've gotten this right or not, that balance between making sure that you haven't shut the door to the innovation that so many of you in this room have been involved in creating the kind of economic success in our nation, and simultaneously providing that sense of confidence and optimism that are critical if you're going to succeed and get back on our feet again. Now, let me just quickly say to you, in putting this together, it was complicated. But I was also determined, as someone who's been around the Senate for a good many years, as David has pointed out, that it was possible, despite all of the accusations about the institution, that it could operate in a civil fashion. I don't subscribe to the notion that you begin with bipartisanship. The country wasn't built with bipartisanship. It was built with a tense debate over partisan ideas with the goal of ultimately reaching some common answers to these issues. But what I wanted to see the Senate do, unlike what we did with the health care debate, is actually engage in that vibrant, healthy discussion about what this structure ought to look like. And over a period of a number of weeks on the floor of the United States Senate, some 60 amendments were debated. Only one required a supermajority vote. All the rest were decided by 50-vote margins. When we went to conference, we debated 60 amendments, equally divided between Democrats and Republicans. We went to conference with Barney Frank in the House. We considered 180 amendments over that two-week period, all of it conducted on C-SPAN. And again, one of the evidences of that, I was in India not many weeks ago and speaking to the Reserve Bank of India, their central bank, and I got grilled rather pointedly by members of the Reserve Bank. And I asked them how they knew so much about the bill. And a woman stood up, she said, because I watched every second of it on satellite television, both in terms of the Senate debate and the conference committee. And that may not seem like much to you here, obviously, given the import of the subject matter, but I thought it was critically important that the Senate could demonstrate, even in a rough political environment, that we could do, I think, what the founders intended, and that is have that vibrant debate to try and produce a result. Now, one of the criticisms is, of course, that we left a lot unanswered by the regulators. Tomorrow morning, I'll have a hearing with the major regulators before the Banking Committee, in which we're asking them to lay out their plans over the coming weeks and months on how they're going to develop the regulations, the comment period, and ultimately answer some of the questions that, frankly, I didn't think 535 members of Congress could begin to answer. Over the years, we've had debates about whether or not Congress ought to set accounting standards. And I know there are members of the board here, the Washington Economic Club, who have a history in the accounting industry. And while I've not necessarily been happy with every decision the FASB has made, I have resisted vigorously the idea that the Congress would ever set accounting standards. We were beyond the competency of even trying to write this bill to some degree. I say politely about my colleagues, but the idea that you're going to then ask the Congress to get into the nuances of proprietary trading or the derivatives area is really asking too much. I point out that in 1933, when the Banking Act was passed, that bill was 37 pages long. The act that created the Securities Exchange Commission in 1934 was 29 pages long. Now, this bill is over 800 pages as a bill itself. And we have left a lot to the regulators. And obviously, they're going to have a lot to say about how all of this works. But I felt it was the only way to do this intelligently, to try and set out goals, and then obviously the work that needs to be done. So obviously, that'll be very important to watch in the coming days, even though I'll no longer be in the Senate. That many of you in this room and others will be obviously watching it carefully and expressing your views on these various regulations as they emerge. I happen to believe that the things we tried to do, and I'll end on this note with you, the four major goals I had, aside from that issue of, one, trying to make sure we didn't strangle what has been a critically important, obviously, industry for our country and maintain leadership. I followed the 19 principles laid out by the G20. I didn't announce this during the debate for all the obvious reasons. But in April of 2008, the G20 laid out 19 principles of what they thought global harmonization of financial rules ought to be. And we sort of tracked those 19 principles along the way. And obviously, a very important goal is to create that harmonization. And I think the G20 meeting in April in Seoul, I think will be a great step forward to advancing that cause. The Basel meetings of a few weeks ago, setting capital standards, I thought did a good job by and large. You may argue this way or that, but nonetheless, I think they have had it about right with 7%. And obviously, trying to get harmonization here will be critically important. So you not only avoid regulatory arbitrage, but even sovereign arbitrage. The last thing we need is what I faced in January, and that is people showing up at my doorstep and saying, if you don't deregulate further, we're all going to London. And then to discover that counterparts in London were getting the same argument, but the answer was we're all going to New York. And obviously what Arthur Burns worried about years ago, the race to the bottom, is something we need to avoid. And it's in our interest as a nation, as well as those of you involved in this industry, that there be that sense of harmonization. It's in your interest to do so. And what we try to do is end too big to fail, provide transparency and the more exotic instruments, create a consumer protection bureau that would give consumers of financial services a degree of confidence, and set up what a sort of an early radar system so that we could point out not only product lines but also institutions that would pose great systemic risk to the system. And obviously we'll have to wait, let's assume the regulations emerge well, to see how well this actually works. And I'd be a fool to suggest in front of you this evening we've written a perfect bill or that it's going to work as well as all of us would like to. Only time will tell. But I think we did the right thing by trying to put this together. And despite the fact that it had partisan votes in the end, a good part of this bill, major parts of it, were actually written in a bipartisan fashion on major parts of it. So with that, I apologize for going on this length, but just to give you some idea of the framework and the environment to operate in. And the question now is, as I said, the regulatory environment we have to go forward with. But again, I thank David and I thank the Washington Economic Club. You're very generous to invite me to come on down. I look forward to your questions. All right? And I'll email the speech to you, and so you can all read it tonight, the speech that you didn't get to.
So, you're obviously enthusiastic about what you've done in the Senate, and you're obviously very knowledgeable about financial service matters. Do you have any regrets about deciding not to stay in the Senate?
No, none whatsoever. I say this, I look clairvoyant, actually, in having made the decision in January not to run. And let me tell you, it was a hard call in some ways. I love the work. I enjoy the institution. I like the members I serve with. But it's time, and in fact, had I not really gone through some difficult times over the last few years, I might have robotically just continued, as many members do. They start the fundraising too early. Before you know it, they've sort of made the decision without thinking about it to continue. And as I've told some people the story, we passed that health care bill at 7 a.m. on the morning of December 24th, Christmas Eve. And I had not been to Senator Kennedy's grave. And I was going out to the airport. The plane was late. I decided to go up that morning and visit his grave in Arlington. I didn't know exactly where it was. It was an incredible morning, for those of you who remember that morning. Bitter cold, new snow, not a cloud in the sky. And at 8:30, 8:15, standing there on a hill and looking back over the city, I asked myself the question that too few people in politics ask themselves. Do you really want to do this again? Are you prepared to put the time and energy in to the effort? And the answer to myself was no. I love serving. It was going to be a tough race anyway. But did I want to spend 7 more years doing this? And the answer was no. And I made that call and announced it on January 6th. Some people have asked me whether or not I've had any second thoughts about that. The only second thoughts I've had is how brilliant the first thought was. And so
what do you plan to do when you're retired from the Senate?
Well, you pointed out I have 2 very young children. I decided to have my own grandchildren. I missed that middle part in here, so I've got be busy here with Jackie on that. And I don't know. I've got to make some decisions fairly soon. That great line that Jackie's reminded me of, you marry people for better or worse, not for lunch. And so I'll wait and see. I'm going to talk to some folks. You're prohibited under Senate rules from really entering any kind of conversation with people about it. And the advice, I've had wonderful lunches with George Mitchell and Chuck Hagel and Tom Daschle and Don Riegel and Al D'Amato and others. And the common denominator from all of them was don't jump too quickly. George Mitchell had told me a great story. He said that he took him 5 years to unwind the commitments he made in the first month when he retired. He said yes to everything and then regretted deeply that he had done so. So I think a little time and patience, take a breath.
Okay. So when talking about back to the legislation for a moment, what is it like to negotiate against Barney Frank in a conference committee on C-SPAN? Is that something you would do again on C-SPAN?
Well, first of all, actually, Joyce, Barney's smart and he's funny, got a great sense of humor. I used to tease him all the time because the Republican mantra on this debate all the time was Fannie and Freddie. And I used to warn Barney, I'd say, Barney, you don't have to rise to the debate every time they bring it up. And it got so at the wee hours of the morning, invariably at a dull moment, someone would bring up Fannie and Freddie. And sure enough, Barney would go on for an hour about Fannie and Freddie and rise right to the debate every time. But he was very, very good. And we had 42 members in that conference committee. And obviously, it's when you're dealing with something of this complex, and you're not only dealing with your colleagues there, but also obviously stakeholders, a White House, and issues that aren't necessarily, I mean, one of the great issues is how do we have a better literacy level in financial services? And I'm a great believer that we ought to begin in elementary schools with basic math courses, teaching people how to balance a checkbook or how to understand what debts are. And you got to begin that early on if you're going to succeed in this. And to a large extent, one of the banking committee benefits of being on the banking committee for years was, unlike the Foreign Relations Committee or the Armed Services Committee, where everybody thinks they could be Secretary of State or should be Secretary of State or Secretary of Defense, banking for most members of Congress is such an arcane subject matter that when you would arrive to the floor with a bill, if you had relative unanimity in the committee, you'd arrive and the only question you'd ever get was, is it okay, basically. I mean, and so it was much easier, in a sense, to get things done because most people didn't really follow the issues that carefully.
Well, this bill, as you pointed out, is 800 pages. Some people have said it's 2,200 pages. Where does that number come from? I don't know. But it supposedly mandates 60 studies and 240 sets of regulations. How can you really know how it's going to be implemented, or can anybody really know how it's going to be implemented and what the real impact will be? Well,
it's a great question, and the point in the remarks. Again, this was, as I said, you're really asking people to get into the subject matters as we did on proprietary trading and 716 on derivatives and credit default swap, all the other things that were complicated. And my view was to expect a vote of 51 to 49 in the Senate on a particular outcome, and then have that become the law of the land, knowing what was at stake in all of this, was asking way too much. So my view was if we could point a direction, as we did in proprietary trading, we clearly think in certain areas in terms of hedge funds and private equity that banks that have the safety net of the federal government shouldn't put taxpayers. I don't think anyone really argues with that, the general notion. But obviously there are examples where proprietary trading is important and critical. So what votes am I going to have on the floor of the Senate to get that nuanced in that debate? And my view was it was dangerous to do it. So if we could basically state a broad goal, I think Paul Volcker had it basically right, and then outcome what you'd like within a time frame, what you'd like an answer to be, and then ask the people who spend their lives doing this with a public commentary period and the ability to then provide the nuances that are necessary so you come out with a reasonable conclusion. And I didn't know how else to do this. Otherwise, it was going to be, I think, dangerous to leave it open that way. So the studies and and leaving to the regulators was the only way I thought we could responsibly respond, David, to the situation.
Now, let's suppose the Republicans were to gain control of the House and maybe at some point the Senate. Do you ever fear that this bill will be undone by a future Congress, or you're not worried about that?
Well, it could be, obviously, and that depending on what happens, if you wonder, I think it's some peril. I mean, what I suspect if I ask most of you in this room, there are a lot of things you'd like to see, but I think one theme that would probably run through each and every one of you is what you need is certainty. You'd like some certainty. What are the rules? How does this operate? I think the last thing we want to go through at a time we're just beginning to come out of this is a lot more uncertainty. All of a sudden undoing everything and then questioning what is going to replace it. Where are we going with all of this?
Right.
And so the broad outlines of this, I think people generally agree with. The too big to fail, I don't need to tell you, that passed 93-5, the First Amendment that I offered with Richard Shelby on the floor of the Senate. Again, I think there are legitimate issues about that problem, by the way, which we didn't solve, which the coming Congress will have to. The bankruptcy laws of this country can accommodate a one-off bankruptcy. What we're not well prepared to handle is when you have a highly interconnected institution and how you wind down that institution and the potential impact on institutions that are not at risk of failing. So those are issues that still need to be addressed. But I think the idea of undoing all of this, it's the one issue, by the way, I've noticed in the polling data. Gallup the other day indicated that if you're a candidate as an incumbent or a challenger running for the Congress this time, there are two things you want to talk about. One, you want to reduce the debt of the country, and secondly, you either voted for or you would have supported the financial reform bill at 70%, roughly 70%.
And you came close to working out a deal on the committee with Senator Shelby. How close did that come to being, into being, would you say?
Well, this is one of the great disappointments. At every bill, David, I've been involved in for 30 years, without exception, I had a Republican partner on every one. Did child care legislation with Orrin Hatch. Phil Graham and I wrote the Private Securities Litigation Reform Bill to end some of the frivolous litigation that with startup companies back years ago. Dan Coates and I wrote the Family and Medical Leave Act. I'll give you an idea, Dan may be back in the Senate as a result of the race in Indiana. This was the first time I didn't have a consistent partner. And it was a reflection, I think, of the political times we're in as to whether or not people felt they could do this, which was disappointing. And so what I did in replacement of that was to have various points where I tried to get partners on various pieces of this. And I broke up the committee. I asked 8 members of the committee to take on responsibilities. This is a lot to chew, a bill of this magnitude. And so I turned one to Mark Warner, who, by the way, it's a great gift to have him on the banking committee. I mean, he knows this subject matter. He spent a good part of his life in it. And so brought a very strong practical sense needed in this debate and discussion. But I asked Mark Warner to join with Bob Corker of Tennessee, who's very talented and very bright and cares a lot about it, was in the real estate business in Tennessee, to be the partnership on Too Big to Fail in resolution. And they went off and worked on that for weeks. I asked Judd Gregg and Jack Reed to work on the derivatives section, and they spent weeks doing it as well. And then I asked Chuck Schumer and Mike Crapo. And Mike's tremendously bright, and Chuck with a lot of energy to work on the governance issues. And Richard Shelby and I left the consumer piece to ourselves. And as a result, they resolved a lot. Not everything got resolved. But it was sort of, it gave people a sense of being vested in outcome and spending the time and listening, not just in the hearings we held, but all the informal conversations. Literally hundreds of people from the private sector, from the financial services sector and others that came up and spent literally hours with these staffs and members talking through these issues and how it could work. So I would have loved to have had a partner all the way through, but I ended up having to have partners at various stages of this to get the job done.
On the Volcker Rule, so-called Volcker Rule, are you happy with the way it ultimately came out? Because some people say it has a fair number of loopholes and therefore doesn't really implement what Paul Volcker's real vision was.
Well, it does basically. I mean, you know, that I mentioned earlier in terms of what it sort of prohibits, and I think again there may be others who object. I think there was the basic idea behind it. I think is sound. But I think the fact that people like Goldman Sachs and others are already sort of shedding those parts and divisions of their own businesses indicate of people sort of stepping up and moving on it. As I said earlier, David, I think what we ended up with was both substantively correct, and it was what I could politically do as well. People have asked me, well, you know, this de minimis piece of this thing, why did you end up with 3%? Well, I'd love to tell you it was because I sat down with 20 economists, and that was the number they came up with. What happened was I had some wanted 10, some wanted none. 3 got me 60 votes. That's why we ended up with 3.
Okay.
And that's when you try to get a bill through, and this is...
Well, that seems logical. But, so let me ask you, in your 30 years in the Senate, would you say, as you leave the Senate, that this is the bill that you're the most proud of, or what would you say you're the most proud of having done in the Senate?
Well, first of all, you know, at about 3 in the morning, Congressman Ken Jaworski in the conference committee proposed that the bill be called the Dodd-Frank bill. There was one objection to that, mine. You know, this could turn out to be Smoot-Hawley, you know, at some point. Now, for those, and you know, 50 years from now. there'll be people screaming about who was this guy Dodd-Frank that passed this. So I'm not excited about having your name on a bill. I think it's getting it done. And it's, well, it's obviously very important. And my hope is it does what we all hope it'll do, that it'll strengthen our country and put us on a solid footing. Okay. Nothing would make me prouder that ultimately that's what occurs from all of this. And obviously it's early yet to tell that. Yeah. But I would tell you as well that if you ask me what cluster of issues that gave me the greatest satisfaction during my 36 years, obviously in the House and the Senate, it was the issues around children. The first thing I did in 1981 when I arrived in the Senate is I formed a children's caucus with Pat Moynihan and Arlen Specter, Bill Bradley, and others. There was not a single, there was a caucus for every imaginable constituency in the country, except for 1 out of 4 Americans were children. I didn't have my own children at the time, so it was more of a theoretical thing, but nonetheless, over the years, the Family and Medical Leave Act, the child care legislation, infant screening, premature births, pharmaceutical drugs for kids, while a couple of them got some more notoriety than others, that group of issues over 30 years are the ones that collectively gave me the greatest sense of satisfaction. And autism, spent a lot of time with Rick Santorum on autism bills. And so that's the group, I think, more than anything else.
Now, you've been in the Senate 30 years, 6 years in the House. What's the biggest change in, let's say, the Senate since you started? And related to that, would you think the filibuster rules should be changed or could be changed?
Well, in fact, I testified this morning before the Rules Committee. I am vehemently opposed to changing the filibuster rules. To me, they could do this on a motion to proceed. There's some matters where you could change that. But on the underlying question, I always find it's new members who come in who get frustrated in the Senate. And you can get easily frustrated, given the difficulty of trying to get something done. But I've always reminded people the founders were not only concerned about what we did, but how we did things. And I guess taking some sort of parochial pride in the filibuster rule in the Senate, and that it was 2 members of the Constitutional Convention from Connecticut, Roger Sherman, in whose seat I sit, and Oliver Ellsworth, who was the 2nd Chief Justice of the United States Supreme Court, or 3rd, I think, that wrote the Connecticut Compromise. When the Constitutional Convention was about to collapse, when small states were frightened what larger states would dominate the debate, they came up with this idea of a bicameral system to create the Senate where equal representation. And the Senate, unlike the House, is the antithesis of the House, in that the House has a job to protect the rights of a majority, including a majority of 1. The Senate is specifically designed to protect the rights of a minority, including a minority of 1. And you end up changing the Senate to be sort of a mirror image of the House. Why have it, in a sense? And so I hate to see the rules get abused, and that happens from time to time. But you don't address the issue by destroying the essence of what makes the Senate critically important, in my view.
The biggest change you would say since you arrived?
I think the stripping the socialization from the institution, I don't care what institution you're a part of, private or public, the ability of people to get to know each other is critical. And whether you're a labor union or a corporation or Carlisle, whatever it is, you've got to have people who spend time with each other. I was a page in the Senate back in the 1962 there for some of the all-night civil rights debates. And so I watched the Senate and perform remarkable tasks. I've often made the case, and someone may argue with me, that maybe the worst decade, or one of the worst decades in the 20th century for the Senate was the 1950s. The era of the McCarthy era, a lot of finger pointing, accusing people of being less than patriotic and so forth. Kind of a dark time. And you might make a case, and again others may argue with this, that the 1960s were maybe an incredible decade of the Senate, with things I think we're proud of as a country today. The Voting Rights Act, the Civil Rights Act, Title I in education. A lot of good things came out of those years. And it was basically the same Senate. It wasn't fundamentally different. And yet here was the same institution responding not terribly well to the issues of its day, and yet a few days later. I don't think you're on a single trajectory. I think they're kind of waves back and forth. I don't know how many of you read Robert Caro's great biography of Lyndon Johnson. But if you read nothing more than the first 150 pages of that book, and they talk about the golden age of the Senate in many ways. Obviously the days back of Clay, Calhoun, Webster, and the like. So I have a lot more confidence. I see some wonderful people coming along in the Senate that are there today that I think are going to be good United States senators, Democrats and Republicans, that care about the institution, want it to succeed. But when you arrive on Monday night or Tuesday morning and you leave Thursday night, racing back to your states, there's no time, too many caucuses that don't give people enough time to get to know one another. People always ask me, why was Teddy Kennedy so successful at getting things done. There was nothing mysterious about it. And having watched him for many years perform in his legislative capacities, the Republican leadership from time to time would try to send him the meanest junkyard dog to be his ranking Republican on committees to slow him down. He was getting too much done. And what they didn't realize is Teddy had a great ability to enjoy people regardless of political ideology. And he'd have a dinner at the beginning of each session. And he'd invite the Democrats and Republicans, no staff, no family, come on and have dinner. And he'd ask each member what they cared about, what they'd like to do over the next Congress and the Senate, and particularly the person sitting next to him on the Republican side. And he asked them what they'd like to do, what they care about, what they'd like to see done differently, and he'd say, well, let's do it. Let's figure out a way to work together and get it done. And so even people who went over prepared to try and stop things, when someone's willing to work with you and to make things happen and develop those relationships, you can accomplish a lot.
Your father served in the Senate from 1959 to 71,
Right.
and what did he tell you about the Senate? Did he enjoy the Senate? You,
Well,
you wrote a book about your father
Yeah,
subsequently.
well, I did. He was, because the seminal event in his life, he was 36 years of age and was asked by Robert Jackson, who became sort of a father figure to my father, to go over and do the interrogation of the initial 21 defendants at Nuremberg in the summer of 1945. And by December of 45, had taken over the entire prosecutorial team for the United States for Jackson. Became his assistant, and then spent the next year and a half. But he did something that wouldn't happen today. He wrote my mother every single day, 12 and 14-page letters, 400 of them, which I didn't know existed until a few years ago. And I decided, because my parents had passed away years ago, that they were such, first of all, they're great love letters. I first read them, I said, who the hell is this guy talking about my mother this way? I was, yeah. And then realized I'm one of 6 children. There was obviously more going on than I don't want to admit.
But you're the 5th of the 6, so you must be...
I came along in that. But they're also their great history. I mean, his observations about the defendants from Goering and von Schirach and Speer and the likes was great history, but also great lessons. I mean, he made us, we had to sit around and memorize things at the table growing up, and one of the things we had to learn was Robert Jackson's opening speech to the Nuremberg trials. And it really was Jackson was a great writer, despite didn't graduate from college or law school, and maybe the best writer on the Supreme Court in the 20th century. And the line was that we had to learn was that 4 great nations, speaking about the French, the British, the Soviet Union at the time, and ourselves, that 4 great nations, stung with injury and flushed with victory, stayed the hand of vengeance by voluntarily submitting their captive enemies to the judgment of the rule of law, the greatest tribute that power ever paid to reason. It's a great sentence, capturing this notion that despite the temptation to line people up, as Churchill wanted to do, and just execute them, that it was responsible for the deaths of 55 million people, 6 million Jews who were incinerated, 5 million more lost their lives. My father, Robert Jackson, a handful of others, Ben Rosenthal, who was a speechwriter for Roosevelt, and a handful of others said, no, we're different. And this war was a lot more about than just property and territory and treasure. It was about values. And so for that, his experience from that was, everything else was affected by that. The rest of his life.
He enjoyed being a senator.
He did, I think he got frustrated with it, and he had a tough ending. He had a very tough ending. He was censured by the Senate in the last couple of years of his life. I think it killed him, killed my mother. I had several siblings of mine when I first ran for public office that wouldn't want to talk to me for almost a month, that I was going to get involved in public life again in the family. And had a hard time with that.
When you joined the Senate, you were a member of the Watergate class, and only, I think, 3 members are left, or maybe less now. But you became very close to Senator Kennedy. He was 10 years older than you or more. How did you become so close to somebody in a different age group, and was he your closest friend in the Senate?
He was the closest friend, and a lot of you people in the room, I think, probably knew Teddy, and because he was around the city for so long. He cared passionately about things that he fought for. I mean, I've been with him in times when there were no one else around, and he would speak as passionately and as eloquently about people struggling. I think what happened in his own family, his sister, who suffered as a result of mental disabilities, watching his son Teddy go through a cancer operation and realize that the protocols and trials and medicines that were available to him were not available to others, and motivated him to care as much about that issue as he did. He had a great empathy. He genuinely liked people, even people he fundamentally disagreed with. It was hard to dislike him. And so he was great company. He was a great loyal friend. I mean, I know that isn't terribly, as Harry Truman said, you want a friend, you get a dog in this town, but Teddy, I remember once a great pal of mine that I go to that Jesuit boys' school here in Washington passed away a number of years ago, and a great friend of mine. And I was asked to give the eulogy at his funeral. And I'm standing up to give that eulogy, and I looked in the back of the church, and there in the very back pew was Teddy. He'd never met this guy in his life, but he was a friend of mine, and that was good enough for Teddy. And all of us in our life ought to have 2 or 3 people like this in your lives that are that good a friend. And so aside from all the politics and other views, great human being.
When you give us some secrets about this. When you were the chairman of this committee and you're working on this bill, every lobbyist in the world wanted to talk to you, I assume, about their issue because it's the most important issue in the world that they had to deal with. How did you isolate yourself from every lobbyist, and how do you deal with all those lobbyists?
Well, I think some of the staff are here from the banking committee, and Eddie and Silverman and Amy is here, and I don't know who else is in the room. Eddie Silverman and I worked together 30 years ago. He was my first banking committee staff person in 1981. And then after about 7 or 8 years, he left and was with Greenwich Capital Markets for about 20 years. And I lured him back for this final push. Sean Meyer was here as well, was actually the staff member now at the White House with the Obama administration. And I said, Eddie, will you come back and be a part of this? He said, I will on 2 conditions. I won't read anything and I won't write anything. I don't want any record I was in town. So Eddie became the person. I made it a policy during this period that I wanted to hear from lobbyists, and that they ought to, but their best time would be spent with my staff. They're coming to talk to a senator. Invariably, we're going to ask the staff people to get involved and evaluate what's being discussed. And I didn't think it was going to help either them. I remember several people in the financial investment community called to talk, and I said, look, I'd rather have you get your people to come up and spend time with the members of my staff that are working on that particular thing. And since you've asked the question, David, I think it's sad in a way that we've allowed the word lobbyist to become such a pejorative in the system. Good lobbyists are tremendously valuable. In my 30 years, some of the best ideas, good recommendations have come from lobbyists. Now, anyone who comes in and does not give you good information, I don't expect them to necessarily advocate against their own interests, but gives you false information or lies to you in some way, I never let in the office again. But that's been the rarity. It's the exception, clearly. Most people who come in make a good case, have good information, and ask you just to consider it. And we ought not to consider that a liability. And in this town, no matter how good your staff is, there's always some other people who can help you to be better informed. So we had plenty of people that came through that door and all the time to talk issues and discuss what they thought ought to be in the bill.
Now, on the Bureau of Consumer Financial Protection, how close did it come to being an independent bureau as opposed to something in the Federal Reserve?
Well, you know, this is where I said earlier, this bill is really a bipartisan bill in substance. I mean, I mentioned to you earlier the too big to fail and resolution vehicles were clearly bipartisan. And the issue of putting the Consumer Protection Bureau in the Federal Reserve as an independent bureau was a Republican idea. I mean, that was not, when I was looking to build bipartisan support, that idea actually came from the Republican side of the aisle. My original proposal, I proposed a bill that attracted a discussion draft. It was a bill that a lot of people didn't like, but I thought it made more sense. I had a single prudential regulator, consolidated the various regulators in one. I housed within that single prudential regulator the Consumer Protection Division. So you'd have the prudential regulator and the consumer protection person actually in close contact with each other, working. And as many of you know, it wasn't to penalize the Federal Reserve at all. I just felt that the supervisory function of the Fed, I know it informs monetary policy, but I had more staff people from the Federal Reserve over the years come and testify. Not one ever suggested to me that any decision on monetary policy was the subject of supervisory function ever raised in a single meeting. And so the idea of getting the Fed back to its core functions of the payment system and monetary policy made a lot of sense to me. And I know that was seen as somehow as angry at the Fed. It wasn't about being angry at anybody. It's just trying to create an architecture for the 21st century that made more sense. Now, obviously, I lost that argument, and so we ended up in the regional banks stepped up. And someday, someone's got to address that issue. I mean, the idea we have 2 regional banks in Missouri and 1 in San Francisco. In 1914, that made a hell of a lot of sense, because there wasn't a damn thing between Missouri and San Francisco in those days, and you know, and today there is. But so some restructuring of that system probably needs to be taken on.
With respect to the Bureau, would you comment on, are you pleased with the President's ultimate decision on Elizabeth Warren?
Well, look, this is all practicalities. I like Elizabeth a great deal. We've worked with each other, but you have to be confirmable in these jobs. And I was merely trying to express that I wanted someone that could not only do this, but that also get through the Senate. If we end up spending the next 6 or 7 or 8 months on the subject matter, then of trying to confirm someone, then it seems we're wasting our time. So I'm going to see her tomorrow. She's coming up. She's been given this job to work with the Treasury Department. But I believe the administration is going to name a director fairly soon, probably after the election, to come in and do this. I think Elizabeth can be very helpful on this. And they may ultimately decide to ask her to do that. I don't know what the thinking is in the administration. They come up. But let me mention something to you in this context. I think it's important you know this. When I have spoken with some of the largest investment banks in the country to talk about this bill, conceptually, what do they think? I'll never forget going down a meeting, and I know every one of them there, and I have a lot of respect for them individually and their competency and ability. But I went down in those first meetings in the early part of 2009, fully prepared as well as I could to be informed about derivatives, about proprietary trading, what I thought was some of the real, sort of the cash cows of the industry in a sense, and how that would work. What was stunning to me as the chairman of the banking committee is I spent an hour and a half with these people, and the only two subject matters we talked about for an hour and a half were executive compensation and consumer protection. Rather stunning. I mean, with all due respect, that you'd spend that kind of time. Consumer protection, this radical idea that you might have a place where people could actually, if they deposit a paycheck or buy something that is going to be treated fairly, ought not to be so startling to people. And I think the fears that somehow they're going to overwhelm prudential regulation is ridiculous on its face. There will be conflict from time to time, but smart people can resolve those issues. And executive compensation, the idea that in the midst of all of this, that was the dominant subject matter, I found rather surprising.
But in executive compensation, the bill, you didn't really deal with real constraints. You more or less left it to the regulators.
Well, not only that, but left it to shareholders too. And you've got to be more than just a casual shareholder and so forth. I mean, these are the owners of these public companies, and the idea of having more say in those issues makes some sense to me. And they ought to be performance-based. That's. In my view, that's I thought how the country operates. You do well, you get rewarded for it. You don't. What's stunning to a lot of people is there wasn't the sense as well. I mean, that $700 billion that people voted for and the country reacted to so negatively. At some point, some expression of a gratitude to the American taxpayer for stabilizing this country financially might have been welcomed. And there wasn't much of that. And again, it wasn't going to resolve everybody and make everybody happy. But that disconnect between what was happening to people where retirements were wiped out, homes are being foreclosed, still are to this day, kids' parents' ability to educate their children being devastated, and some notion, as I think most people who are knowledgeable realize that what we did was incredibly important, and that September, that 13 days in September, and some expression of appreciation that taxpayer in this country wrote that check. Now, we're getting the money back, and it's all working well. But the absence of that in all of this always sort of was breathtaking to me in some way. And I don't mean that it would be, go over the top, but some way to say that to people, I think would have done an awful lot to say to some of the voices out there, this is an audience that cares, understands it, and appreciates what people have done.
Well, on losing money, in the bill, you increased the amount of protection from FDIC, I think from $100,000 to $250,000.
Right.
But to be realistic, no bank was allowed to fail and customers lost their deposits before. Does it really make a difference if it's 250, 500, or zero? Is the U.S. government really going to let any depositor lose money?
Well, we shouldn't. And again, the 250, when Sheila Bair, who I have a great deal of respect for, and it was terrific in a lot of this, by the way, has been a very, very good regulator. Obviously, the case of getting above 250, I just felt the optics of asking for more than that might have been a difficult sell for people in the midst of everything else, and we said it. And I've always felt the three great things that gave us that 60 or 70 years of relative economic stability in the country in the 1930s were the Securities Exchange Commission, the Federal Deposit Insurance Corporation, stopping the run on banks, and today, which did need to be changed, Glass-Steagall. But those three things really were the great achievements of that period that gave us, for the first time in our nation's history, that length of period of time of economic stability. Prior to that, we were lurching around almost every 10 years throughout the 19th century and the early part of the 20th century. And so in Glass-Steagall, and I voted for Graham Leach Bliley at the time, and I know others argued about it, but we needed to change that a bit, and maybe went too far. But
What's going to happen in the lame duck session, and will taxes go up for everybody or for some people? What do you predict is going to happen on taxes by the...
well, come January 4th, I'm going to have a very different idea about taxes, I think. No, being facetious here. I really, I tell you, and I'm obviously like everyone else in town, sort of fascinated by this election process, and I wish I could tell you with some certainty what's going to happen. I have no idea day to day how this is going to work out with all the things that are occurring and the anger in the country. My view is lame ducks, having been through several of them in the last 30 years, don't amount to much. I remember once we went up to Christmas Eve, and it was over a gasoline tax. For those of you older in the room, and we never even voted on it, despite the fact we stayed around for 2 months actually. So invariably, you're going to have changes, and I think the prediction we're going to have certainly a reduced presence of Democrats in the Senate and a reduced number in the House. Whether or not you lose control, I don't know the answer to that. But anyway, it's going to be, people are going to want to wait to do things, and so the idea that you're going to take on some of these issues and get them done will be hard, particularly over a 2-week period, where in the Senate, obviously, getting 1 or 2 people, unless you keep people in all night to work on these things, will be hard to achieve. My hope is that there'll be a few things we might get done, but I don't expect the tax debate for any different reason than we saw recently. I mean, there was a division about whether or not you ought to eliminate or allowed to expire, obviously, the so-called Bush tax cuts. And again, I think in our caucus that I really would listen more, because the people who are going to be around, I let them engage in the debate. But it was a real division within the caucus on the issue. And for all the reasons many of you are aware of here as to what the implications would be. I thought it was interesting that in Connecticut there was a survey done, and by a substantial margin, most of my constituents, I don't know how scientific the survey was, wanted an extension of all the tax cuts for a year or 2 or 3, whatever it was. And I know people say, but that's such a small percentage of the population that would benefit from a complete extension for everyone, including the top 2%. But I had an epiphany, David, on this issue years and years ago. Jackie's heard me tell the story before. I was a freshman member of the House, and I represented half the state of Connecticut, that congressional district, and half the coastline of Connecticut. And I made the radical suggestion as a 32-year-old congressman that more of that shoreline ought to be available to the public. Well, needless to say, in Wilton and Greenwich, I was a little, we had just had Karl Marx had just gone to Congress. They wanted to put in Congress. So anyway, that was quite a stir, and then what was I thinking of? The kids from Hartford and Bridgeport might show up at the beach. And about 3 or 4 months later, we decided we better do a survey to find out how much damage I'd caused myself politically with this radical idea. And I didn't lose a single vote or gain any votes in the shoreline communities. I wasn't taking anybody's house. Where I got myself in trouble were people who lived 30, 40, 50 miles inland with probably very little expectation they could afford those very expensive homes on the coastline of Connecticut. But after their kids go to bed at night, they sit around that kitchen table and they dream. And they dream that if this turns out right, or that turns out right, or this happens for us, one day maybe we'll be able to afford that house at the beach. And I was messing with their dreams. And the epiphany for them, the lesson was, you can fool with people's reality all you want. You fool around with the American public's dreams and their aspirations, be careful. And I think this is really all about that more than anything else that people need to understand. And that's the
Thank you. Final question is, are your daughters happy you're leaving the Senate, or are they sad that their father's not going to be a senator now?
Well, the 5-year-old says that we ought to open an ice cream shop, and that may be what ends up doing. And the 9-year-old just made the cut. I don't know if she's going to make the final cut for the Nutcracker. The woman who runs this thing should have a job at Paris Island. I'm deeply committed to ballet for the next 7 or 8 weeks with the Washington Ballet. Every night I'm in a ballet lesson. So she doesn't really care whether I'm in the Senate or not. Just make sure she gets to be in the Nutcracker. So that's
all right. Well, Senator, on behalf of our members, I want to thank you
very much. Thanks, everybody.
I'll give you a gift. 1 second.